Hi guys, this is Mark Shaws in the Pattern Trader here, and as you can tell, it's a fairly rainy and gloomy day in South Florida. Actually, I welcome the change. I know the heat is going to be around the corner, but it was nothing but sunshine if you were long the US dollar trading today. So the US dollar now is bumping up against a critical inflection point, certainly against the euro, where we're trading around the 112.70 area. This is just a hair above the November lows at 112.15. The dollar rallied today based on some friendly consumer price index report and also the probability that the government will avert a shutdown. But as you guys know, I really don't care about the reasons why. I look at patterns and price action. And actually, the best proxy for the US dollar in my mind has been looking at the long-term euro versus US dollar monthly chart. As I've been alerting my members for the last several months, even year or so, when we look at the long-term trend in the euro versus the US dollar, even going back to 2009, we see that this pair has been trapped in a long-term descending triangle. Descending triangle is denoted by a sloping trend line that connects all the highs and a horizontal line that connects all of the lows. And the low is right around where we're trading right now, around the 112 area. So that's why I say we are hovering at a critical inflection point. Also, when we look at the weekly euro versus US dollar chart, you see a very well-defined and classic head and shoulders price pattern on the weekly. And again, the neckline is right around the 115 was the first critical area, and now the 112 again represented the lows back in November. And should we take out the 112, I think that it's undeniable that the dollar could rally all the way down to the 108, even the 105 area in the euro. So the euro would plummet versus the US dollar, and the US dollar would go higher. I also like the dollar versus the Swiss franc and against the British pound, which means the British pound, which is trading at about 128.5 now, to my mind looks like it's going to fall back at least to the 125 area based on this new momentum in the US dollar. Now, another pair that is also a proxy for the US dollar is XAU USD. This, of course, is spot gold. And again, gold is measured against the US dollar. And with the US dollar now going higher, this does put pressure on gold. And we see, again, gold is trading within the context of a monthly symmetrical triangle. And there is a lot of pressure at this 1325 price area. And today we saw a major key reversal in XAU USD. And what I mean by key reversal is that the daily price level shot to about 1320 and is now hovering around 1305. So crashed $15 from the highs of the day, denoting what I call a key reversal. And these major reversals often point in the new direction a pair is likely to take. And again, I think there is all kinds of pressure on XAU USD at the 1320 area. With today's key reversal, I can imagine that we will be under pressure going forward. So I'm going to keep you apprised on the movements in the dollar. Again, I think we are at a key inflection area. I like the short side of euro versus US dollar, short side of pound versus US dollar, and the short side of XAU versus US dollar. So with that said, I wish you a healthy and prosperous trading day, and I'll see you next time.